So I'm Melanie Davidson. Thank you, Peter, for inviting me tonight, and thank you all for showing up. I have a couple of quick questions as we get started to talk about impact investing tonight. How many of you in the room have heard about impact investing before tonight? Oh, awesome. How many of you would say, keep your hands up if you think you have a high level of familiarity with impact investing? Okay. How many, raise your hand if you've made a impact investment? Okay. And where are the impact entrepreneurs in the room? Wow, there's a lot. This is great. No. That's okay. So again, I'm Melanie Davidson. My background is I am a bleeding heart do-gooder. I've had a philanthropic spirit since childhood. I am a strong
You keep going.
Yeah. Okay, thank you. So I'm a strong social advocate and impact investor focused on early stage companies who focus on poverty alleviation, economic and environmental security. I am also, I would say my education would pop up, I would say that's irrelevant, and I say it's irrelevant because I put myself through college about 22 years ago. Today, that is about 4 times as expensive. I wouldn't need to do that in today's world. I think higher education is too far out of reach for too many people. Actually, I've written notes if I... are you in presenting mode? You want to put on the thing? There you go. Yeah. Let's have a bag, thank you. So my experience is I'm a managing partner at PeakChange. I recently, let me see, can you put this back and actually just mode up here? We're very technically challenged and I do not know how to use a PC. So, I'm all Mac.
Talk some more.
Thank you very much. Anyway, I recently president and CEO of a digital marketing agency here in town. I have over 20 years of consumer marketing experience, and I'm a political activist. And I'm happy to share more about that, but that requires a conversation over a drink, and I prefer tequila or champagne, just for FYI. So thank you for just bearing with us. We'll get this going. So impact investing. So most of you know about this. So I'm not really going to spend a lot of time in here since most of the room has a lot of familiarity with it. But the definition is are investments made into companies, organizations, and funds with the intention to generate social and environmental impact alongside financial return. So the intention to generate social and environmental impact alongside financial return. The type of impact investments really depend on individual. It's a very personal choice, and it's usually rooted in emotion or intellectual curiosity. Just as a donation to a nonprofit, oh, brilliant, thank you. Yay, here we go. Let me just catch up. Okay, so just as a donation to a nonprofit goes towards achieving a specific outcome, so does a direct investment. So imagine if we could shift some of these dollars to for-profit impact ventures and use the returns to amplify our philanthropic endeavors. It's not an either. I mean, I think you sort of mentioned this in the beginning. It's not an either or, it's an and. For me, I always lead my investments with impact outcomes, not solely based on financial returns. Impact must be inherent in the business model. It's not an add-on. So for example, donating a portion of revenues to charity, while that's a great place to start, and it's and for many that's good, for me it's just not enough. I always also think about, is it good for people? Is it good for the planet? Does it do harm? Oftentimes we think we're doing good for people and the planet, but the impact is it does do harm. So that's something that I always think about. And then in the impact space, we always talk about the triple bottom line, which is really around social performance, economic, and environmental performance. So my journey to impact. My journey to impact started here in second grade in Mrs. Reyes's class at Fox Mill Elementary in Herndon, Virginia, which is a DC suburb. And yes, that's me, not my brother. You couldn't tell from me tonight or from this picture, but I have very curly hair, and I have the sad misfortune of having parents who did not have curly hair, which meant they always kept it short and brushed it when it's dry. So for those parents or future parents of curly-haired children, never brush their hair dry. It actually is very painful. Anyway, Mrs. Reyes came into class one day and told us about, was right in the fall, and told us about a family of 4 that was living in her basement, a homeless family. And for me, that was a shock, that a family living in our community didn't have food, didn't have clothes, didn't have a place to live. And for my 7-year-old brain, it was really about not having presents on the holidays. I think even at 7, I was questioning, I hope there are no kids in the room, but I was even questioning the legitimacy of Santa. So she went on that year to teach us what it was like to live without sight, to live without the ability to hear, to live without the ability to speak. So she really helped me understand that we don't all start from the same playing field, from the same level. We aren't all on the same playing field. That it really does matter where you're born, who you're born to, how able-bodied you are, the color of your skin, our gender, whether or not our access to opportunities accelerated or declined. So I've always this is where the bleeding heart do-goodness comes in. So she really changed my worldview at age 7. So throughout my childhood and into early adulthood, I always did volunteer work for organizations I cared about. I gave philanthropically. And as my access to money increased, so did my check sizes. I felt morally obligated from my place of privilege to give back and to do my part to level the playing field, even if it was just a little bit. Then we're fast forwarding to January 12th, 2011, when a 7.0 magnitude earthquake devastated Haiti. It impacted 3 million of its 10 million residents and killed over 300,000 people. I visited Haiti 2 years after that earthquake on a philanthropic trip focused on addressing gender-based violence. Like many parts of the world, gender-based violence, or GBV, was deep in cultural. In fact, until 2009 in Haiti, it was still legal to murder your wife. That's less than 10 years ago. I was visiting a domestic violence shelter that was doing amazing work. It was led by 2 women who were survivors themselves, so for them it was deeply personal. We had done a great tour of the facility, and after we were sitting around the table, and I asked them what their budget was, and they had no idea. So I tried to break it down a little bit. How much does medical cost you? How much does this facility cost? How much are their legal services? And they still had no idea. And that was a pivotal moment for me. As much as I wanted to write them a check, I just couldn't. I kept thinking to myself, there has to be a better way. How can I stay aligned to my values without continuing to have a minus 100% return? At some point, the money's going to run out. Luckily for me, back at home, I had lots of friends who were already in the impact investing space. In fact, where's Ed Briscoe? Ed Briscoe, who you'll hear from later tonight, helped me with my first deal. And yeah, coached me through the first deal, helped me understand what terms meant, helped me negotiate. So I'm forever grateful for that. That investment was in a local company called Naughty Tie. It's here in Colorado. And they made custom-made ties and used recently resettled refugees as the labor, paying them a fair and living wage. What else do I want to tell you? I became a member of Investor Circle, so I think you had that up on your sheet. We have a really vibrant community here in Colorado. We see about 2 deals a year. Praful's also a member. I think we probably have some other IC members in here. And now I'm a managing partner at PeakChange, which is the impact advisory firm that works with individual investors, group of impact investors, and social entrepreneurs. Okay, why am I stuck? It's a PC. Uh-oh. It's not advancing. Thank you. So as I get more experience with impact investing, I learned how impact investments can look across asset classes. And here are some examples of your options. There's equity, which is usually the most popular. That's direct ownership. So I am a direct investor in a Colorado company called Meet Mindful. It's online dating for mindful people to meet other mindful people. So amplify the impact. There's debt, which is lending to a company. It's just like what it sounds. It's a win-win for both investors and the entrepreneurs, because usually they cannot go out and get loans on their own, or if they do, they're at high bank rates. Guarantees, so MCE Social Capital is another organization that I'm a part of. Collectively, we have a group of guarantors who guarantee their own assets to go and secure larger loans and then lend small loans into the field, usually women and women living in poverty on less than $1 a day. Direct donations and grants, I'm sure everyone's familiar with that. Those are using traditional philanthropic tools for for-profit companies. Donor advised funds, again, plug for Ed and Impact Charitable. That's another sort of way to give charitably, and in some cases, for-profit companies or impact companies can create their own donor advised fund and then use some of their returns to reinvest in their communities. Ventures funds, I mentioned Investor Circle. They have their own venture funds. Sometimes they're thematic, sometimes they're gender-based. You can either be a limited partner in a venture fund where you don't make the investment decisions, or you can be a general partner where general partners make those investment decisions. And then public securities. So Change Finance, we have Dora and Donna in the room if anyone wants to talk to them later. We were just on the New York Stock Exchange about a month ago, launching their first ETF, which is free of fossil fuels. So it's a clean ETF that's free of fossil fuels. So I'm an investor in both the operating portion of the company, and we have some money in the fund. So why should you care? This is my point of view, so it might get a little bit snarky, so just bear with me. But how many of you in the room have heard of Juicero? Exactly. So Juicero is a $400 juicer that's connected to the internet that received $120 million of venture capital and went belly up in the, within the year. So for me, like, does the world, I mean, I have nothing against juice, but does the world really need another juicer, and a $400 one at that, when nearly half the planet doesn't have clean drinking water? 1 in 5 people lack access to modern electricity. And our global food and agricultural systems are going to require profound change if we're going to nourish today's nearly 800 million hungry and 2 billion more added by 2050. So some of the ventures you'll hear from later today are actually solving some of these exact problems. But for me, we really need to think about how can we significantly shift capital to ventures that are doing good, creating jobs, solving some of our most critical issues, making us less reliant on government. So no matter where you sit politically, I think we all can agree that business is more agile than government and should be, and can be and should be better to address these issues. I think also why we should care is the great wealth transfer in the new economy. So we are in the middle of the largest wealth transfer in human history. $30 trillion will be transferred in the next 30 years to women and millennials. Millennials are already value aligned. I'm not a millennial in case you were wondering, but I do hang out with a lot, in case that wasn't obvious. But they are already values aligned. They don't like the traditional investment in public markets. And in the next decade, 70% of the world's wealth will be in the hands of women 50 and older. 70% of the world's wealth will be in the hands of women 50 and older, which means the new economy is going to be led with feminine values. It's going to be more inclusive, it's going to be more resilient, it's going to be more regenerative, and more sustainable. So who are impact startup entrepreneurs? There are many in the room already, but typically they are individuals with prior experience in traditional business, nonprofit, or NGO organizations who identify a unique market-oriented solution to a current social or environmental problem. They are also some of the most innovative leaders focused on solving some of our most critical problems, social and environmental issues. So here's one of my investments. This is Silver Nest. They're a local Colorado company. They're focused on helping the aging population stay in their communities and in their homes. It's a technology solution that matches aging seniors to housemates in need of affordable housing, creating additional revenue opportunities for the aging. So why does this matter? Well, it's twofold. Our population is aging rapidly, and studies show that aging in isolation is detrimental to human health and the communities that they are leaving. Second, there are 50 million empty bedrooms in the US right now. So why aren't we efficiently tackling this housing issue? So we've already shown that we have an appetite for the sharing economy with Airbnb, ride sharing services, sharing bikes. So we're already there, and so this is just helping take this a little bit further. I'm also an investor in Evernew. This is a company, a Seattle-based company, textile company that uses technology to recycle cotton waste to recreate any earth-friendly fiber that manufacturers can use in their end product. I was blown away when I first heard this. She extracts cotton scraps, and it's a female founder, so that's why I'm using she, but they extract cotton from the system, take out all the dyes, chemicals, create a pulp, and recreate any fiber. They're recreating cotton, they're recreating wool, they can create rubber, the wicking in our sports shirts, and carbon in cars. So again, why does this matter? I mean, can you imagine a world where your jeans are made from recycled cotton, the rubber in our tennis shoes are made from recycled cotton, the carbon in our cars? It's phenomenal. So my investment focus, again, it varies by individual. Some focus on sort of categories. So you'll find people that are really focused in ed tech, or people that are really focused in renewables, or people that are more eclectic and focused across the board. For me, my primary focus, I invest in impact with a gender lens. With the exception of my first deal, I blame Ed. I only invest in female founders. No, I actually really love Jeremy and Nadi Tai and what they're doing. But so why is this important? Women do have higher hurdles, and so it's important to share that they do have higher hurdles to getting funding. In 2016, women-led ventures received $1 billion of the $63 billion VC funding, and yet they are starting businesses at 1.5 times the rate of their male counterparts. Women-led ventures receive low single digits of venture funding, and it's even worse for women of color who receive less than 1%. Women making direct investment decisions at the VC level are also in the low single digits. So there's 1,000% causation here. We need more diversity and inclusion at the table, making direct investment decisions, and we need to invest in diverse companies more intentionally. And when we talk about gender, and for me in particular, it's really important that we're talking about the entire gender spectrum, so it's across age, race, class, and identity. But why do I invest in women? Because I do it because it's a smart investment decision. Even though all of my investments are early stage, I don't have any losses yet. Oh, I shouldn't say yet. I don't have any losses. I'm just going to own it that way. And there's no shortage of data that shows that when women are in charge, we have better outcomes. We see this in business, and we see this in political environments. And a recent study showed that we can create 6 million new jobs if female ventures are funded at the same rate as male. Additional couple thoughts or tools. Many men and women, including myself, are taking the Gender Avenger Pledge, which states that we will not serve as a panelist or attend a panel at a public conference where there are no women on the panel. No more manels. And I think we made it tonight, so that's great. Just barely. And then I think we're going to hear from Kelly Kiefer later. I actually haven't even met her. I don't even know what she looks like yet, but she introduced us to the Diversify Access to Capital Pledge, which I care deeply about, shifting who gets access to affordable capital, and so recently learned about this. So hopefully she'll talk a little bit about this in the next panel. Thank you. So a couple of dirty secrets about impact investing. So the pitch isn't why you invest. I never invest in a pitch. I think we should actually do away with the 5-minute pitch, the 7-minute pitch. It doesn't tell us anything. It's really more important as to why these ventures are doing this business, what they care about, who these people are. And some of you investors in the room might kill me, but I say the numbers are bogus, especially in the early stage. I mean, there's no, and in the impact space, some of this is such new innovation, it's impossible to tell what the numbers are going to really look like in a year from now, let alone 5 years from now. I think it's important that entrepreneurs show they have an appetite for the financials, because again, we are seeking financial returns in addition to outcome, but again, they're a little bit bogus. So this goes for both entrepreneurs and investors. Challenge the terms and negotiate, and you're going to have to roll up your sleeves. Most impact investments are early stage, and we are investing more than just financial capital. We're investing intellectual capital, or social capital, our experience, and that's what makes it fun, actually, for me, is sort of helping the businesses from the ground up and think strategically and open up my network to that. You know more than you think you do, and you really can make a difference. So I'm going to close with this, and then we can have some questions. Time, treasure, and talent to create the impact you want to see. So you can also have an impact in how you spend your time. I will never use Snapchat. Where you spend your treasure. I will never shop at American Apparel. And where you use your talent. I drive for Lyft, but I would never drive for Uber. So thank you for your time. And with that, I'll take some questions. That informative. I do. Yes. Not regularly, but it's a part of like learning about the sharing economy and being able to participate in the gig economy authentically. So,
Melanie,
you might get me sometime.
Yes. Over here. Hey.
Hi.
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 So I've heard you talk about Colorado as the impact frontier.
Yeah.
And I would love for you to say a little bit about that. What makes us unique? What do you see coming down the horizon in Colorado?
I'm so glad you asked that, Catherine, and that was not
a plant. It wasn't, I swear.
So I have a point of view. I really think we have a tremendous impact crowd and community here in Colorado. I was at a event not too long ago, maybe a year and a half ago, and the mayor, which I did call him out on, called us Silicon Mountain. That just pissed me off. Like, we're not trying to be a better Silicon Valley than Silicon Valley. We are the impact frontier. We own our own impact space. We have an amazing community that goes back 30 years in this space, a lot of the original leadership. So I think Colorado is uniquely positioned to sort of be the leaders for the rest of the country in the impact space. Thank you.
If someone in this room is interested in being an impact investor, what's the best way to start? You had some great advice up there, but how do they get engaged? I mean, this event's a great start, but what do they do after this event?
So like I said, I had some friends that were already in the space that helped me, but I really think a great way to start is some of the organizations that Peter put up. Investor Circle was another great one for me. It's a very inclusive community. I think we need to work on being a little bit more diverse, but I think it's a very inclusive community where the investors are willing to help. We all kind of do due diligence together. So there are lots of those networks. For me, it was Investor Circle. And again, I don't know if we have anybody from Investor Circle, but you can ask me about it later. I meant like, yes, there are some of us from Investor Circle in here. You can ask any of us, Praful and Alicia back in the back. And that's a great way to get started. We see about 2 deals a month. That are all local deals also. Anything you want to add about Investor Circle, Praful? Okay. Yeah. Hi.
Cool. Okay. On all your deals, how are you weighing the financial aspect and the impact aspect? Does it differ? How do you balance that?
That's a tough question because I think one of the challenges in the impact space is still being able to measure outcome and impact. There are a lot of folks that are working on it, so it really does come from a place of your own personal preference. Again, for me personally, I lead with outcome and what outcomes are we trying to achieve. I want a financial return. If it's not a market rate return, it's sort of good enough for me. Again, I come from the philanthropic world where my return was minus 100%, so anything north of that is good for me. But so for me, it's a little bit different. I don't know if anyone else in the room who's an impact investor wants to speak to the financials differently, but it's my own personal preference.
Most of the startup companies fail. So my way of looking at impact investing is, how bad do I feel when I lose my money?
And remember, mine have not failed. Anyone else? Okay.
So one of the things that we deal with, and I'm curious how you engage with this challenge, is Morgan Stanley did this great report that like 68% of investors presume if you're doing good, you must be sacrificing risk return. And we're constantly trying to educate against that. Mm-hmm. Curious how you deal with that.
A couple of ways. Again, a lot of us in the impact space, especially females, I mean, I hate to stereotype and generalize, but do come from a philanthropic background. So again, that argument's pretty easy. You're going to have minus 100% loss in your return investment, or the opportunity to make that back plus some. And then I think I think it's just honestly, I think where we are with the wealth transfer and the coming up with the folks who are going to be investors, they just have different values. And honestly, I think the JP Morgans and the Morgan Stanley of the world are going to be in a whole lot of hurt if they don't start adapting to the needs of the next generation.
I will always ask questions.
Ask away.
Are the return time periods longer when it comes to impact investing or not? I read an article back when, not sure how accurate it was, but it was more talking about publicly traded companies that had impact a part of their mission and how long-term their return to investors was much more successful than their counterparts. So not related to startups, but is there a longer return period?
Typically, yes. And again, this is a values-aligned, a personal sort of values-aligned approach, right? Where in the impact space, the impact ventures, they're actually trying to solve a problem. Yes, they want to make money and have a for-profit, but they're trying to solve something. So that typically has a longer tail. Where, the juicers of the world like want a quick exit and want to make, this unicorn effect. But so yes, typically, but it's not because it's not smart business. It's just because they're trying to solve a problem that has a longer tail.
So right here, sorry. What's your thoughts on B corporations? And do you think it's a worthwhile thing to do for a startup corporation?
I don't know if I have a strong opinion. I think individual employee ownership in a company is just smart. Having, I think B Corps are smart in general. So anywhere where you make the employees a part of the bigger community, a part of the company, whether it's ownership or otherwise, I think it just has a greater impact and better outcomes for all.
So with 70% of the assets managed by women, and only 14% of angel investors being women, what do you think we could do to increase engagement of women in angel investing?
I ask myself this every day. This is what keeps me awake at night. We definitely need more women at the table. And I would suggest, like for the male investors in the room, to invite their female colleagues and friends to the table. Is really, I think, where we start, honestly. I don't know if I'm always,
I always have something to add. Is the fact that only 3% of the accredited investors who can actually invest, do angel investing, invest. So when you look at this 14% is part of the 3%.
I will say there's some optimism warranted from the recent Angel Capital Association survey, which found the percentage of women angels is now 20%, but if you look at new angels, it's actually 30%. So we're getting there.
and I think I'll just add one more thing, and this goes back to your question earlier, is that funds are another way to get more women involved and get started. Where there are a lot of, actually Alicia has one of them, there are funds out there that are focused on women in women ventures, and so that's another way to get more women involved and get started.
I'm a founder and I'm an LLC right now. My lawyer, at one point, we were looking at an L3C and she did not want me to go that route. She didn't want me to be a guinea pig. We're now at a point where we are getting ready to file. I don't necessarily want to be a C Corp, but I'm noticing here in Denver, or at least in Colorado, there's public benefits corporations, but I'm also noticing that there's other types that are out of state, such as a social purpose versus a social responsible corporation. Is there a certain entity that you look for in the founders?
No, not necessarily. So, and all of those questions are beyond my pay grade. So if there's somebody in the room that better understands those structures, that connect.
Okay, sorry. Technical challenges. So I think I've actually worked a lot with women social entrepreneurs in the past, and it's been the question of how do they talk about themselves?
Because if you talk about yourself as an impact company, then you're fluffy and you don't do good returns. If you talk about yourself as a return-based company, you're only focused on money and you have no impact. So just in your experience, hearing, I'm sure, tons of pitches from people and how they balance that conversation, what is your best suggestion for how people do that who are social entrepreneurs, want to be taken seriously, but also really want to say, but we lead with impact, and that's what's important to us?
Let's see. I would say know your audience and start with that. So know who the investors are going to be in the room and do a little bit of research. So if you are in an IC meeting or you're in an investor crew, then lead with investing. And we lead with the impact, because that's what we're most interested in. If you're going down the traditional route, that it might be more traditional. I mean, that's not a very, it's just sort of know your audience. I would also say that, there are lots of impact investors out there. One of the things that I find most pitches miss, even in the impact space, is their why. I think that's almost always one of our investor follow-up questions, is they don't lead with why they're doing what they're doing. And that's a huge, and for impact investors, and I speak to myself specifically, but that's the passion that we really want to hear. We want to know that you're in this to solve this impact problem, and that's not going to come across unless you're sharing your passion and sharing your why. Okay, well, thank you, everyone. Doesn't look like we have another question. Thank you.